Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Just want to make note that the Monday is Labor Day in the U.S. and there will be no streaming. So I hope if you are here and you are going to be having an interesting weekend that, with friends, family, or whatever your plans are, just want to wish you the best and hope you enjoy it. Now let's get to the market. We have a lot to talk about today. If you found today difficult initially, I'm going to help you understand why and also how you might have anticipated the behavior. Go grab a pen and a piece of paper. I'm going to give you some insights I think that you may find interesting and also potentially not find in many other places. And again, thanks for visiting the Trader Lab. Let's take care of business. And I also have to remind you guys about verifying your subscription so you can have access to additional Trader Lab and Bookmap Discord education, theoretically speaking. Okay, there you go. Oh, too many things. Okay. All right, we're getting a target here. That's nice. Hold on. Sorry, guys. We're talking about a short here in the Trader Lab, and we were discussing why it was a short when earlier the context was a little different. So we're going to go into that. So everybody grab your pen and paper if you want to try to develop a better understanding of market mechanics. That's what this stream is about. It's based on auction market theory, how the market works, why it does what it does, and how to integrate that with the volume profile, using that as a chassis, and with order flow, using a high tier tool like Bookmap to put these pieces together into an integrated process. And on top of that, you might say it's condition of the market, market development, trading plans, understanding probabilities or statistics, and putting together a business model that potentially you can replicate if you do the work and also find where your groove is. In other words, how do you take pieces or tools and craft them into something that you can relate to psychologically? That's what the Trader Lab is about. The Trader Lab is about building the business trading, understanding the business of trading. It is not a video game. It is not based on your indicators. It is there's really more to it, and we'll get into that. General disclosure of Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Grab your pen and paper. Now, I'm going to try to move along as quickly as I can. I'm going to give you some statistics, and you're going to say, well, what about that? Well, first of all, let's start with a higher level overview of the condition of the market. This is called a micro composite, and I get a lot of questions about this. What is a micro composite? It's a term, and this is a volume profile. And what we are doing with this, and the reason we use this, is we want to see the volume and the pricing. The purpose of the market is try to figure out what a product is worth. And whether you're in your supermarket or you're here in the financial market, the markets really work the same way, just different time frames. So in your supermarket, they don't change the price much. In our market, it's changing all the time. But the process is the same. What's too high? What's too low? What's just right? And just right changes day to day, hour to hour, and even minute to minute. So we'll look at that. And that's called fractals, not time frames, fractals. Now, these are RTH candles, and what this is called is microcomposite, and what I'm taking is a swing low and a swing high, and I'm measuring what's going on inside of this. Now, it's considered it an intermediate or higher time frame. Now, here's what's important. These yellow lines represent the retail price, and what determines retail? This is terminology, and what it is highest volume. You go to the store, your tuna is $1 a can. Everybody buys their tuna for $1 if that's the fair price in that store, and they want to buy it, and the sellers are willing to sell it at $1. That creates the high volume. That's retail. So for yesterday, this is the highest retail price. In this intermediate time frame, taking all of this volume and putting it together, this orange line is the highest retail price or highest volume for all of this trade. And it took place right there, 37.50. Yesterday's 49.75 in here. Now, let's look at also something else. You'll notice how the volume tapers down here and it tapers up there. The reason this happens is there's less buying up here. And you could see we have wicks and we didn't stay here. It was like, oh yeah, I'll see you later. Down here, when we came outside, taking all the volume into consideration, you see these wicks down here. This is too low. So what happened, and there's no precision in these. What it's measuring is the volume. So we can come outside and then come back towards the mean. We can come outside. I'm not paying that. And come back towards the mean. And so it creates these rotations. Now, here's the next piece, and we'll move on. And all of this is, by the way, available to you in the Trader Lab, and there is no cost to become part of the Trader Lab community. There's a link in the bottom of YouTube if that is something you'd like to take advantage of. Just saying. And there's more, and we'll be talking about it a little bit more. So, what do we see the market doing? Now, I have something I always say at the top of the stream, and I kind of think many traders think it seems so obvious that it's ignored or it doesn't register. Let me tell you why it's important. The market goes up to go down. The market goes down to go up. The market goes up. Now here what it did is it went up in the morning, closed lower. Shorts in the market. The market opens, it goes down, it squeezes the shorts. So we take out shorts and we get longs. The market opens, it doesn't take this out, who knows? And what happens to these longs? It goes down. Now this is Wednesday. What did we do? We opened, we checked the highest volume. Remember retail. In this previous day, I'm not paying that. You got to be kidding. It was a fair price on Tuesday, but Wednesday the shoppers came back and said, nah, we'll see you later. So what happened here? The shorts from here got squeezed, weak hands taken out, and new longs. What happened here? We checked the high volume. I'm not paying that. Remember, retail. You want how much for tuna? I'm not going to pay it. We get shorts in the market. We're out of here. What happens to these shorts? Yesterday, we gap higher. What do? We take out the buy stops here, the buy stops here, but we don't take this out. Now, nobody knows, right? So what happens here? We get longs in the morning. Then what? Sell off in the afternoon. Now the market is short. What do we do today? We gap higher. What do we do today? We squeeze out some shorts, and then we get the actual continuation of this, which is now sellers. Does that make sense? This, in my opinion, is so important to understand how the market works, and this is what we do in Trader Lab. If you think, here's something, write this down. Think like a retail trader. Don't act like one. Think like a retail trader. Don't act like one. Now, here's something I need to take a moment and ask you to do if you haven't done this. You need to verify your subscription today to Bookmap. Now, if you say, oh, I don't have a subscription, how would you like a free subscription? But you're going to need a subscription to Bookmap, even a free subscription, in order to participate in real-time narration I'll be doing in the Bookmap Discord Trader Lab and other streaming events and educational events that are available to all of you. And really what it's about is to clean up, get rid of the spam and the phishing, and we're doing everything we can do to make a great experience for Bookmap subscribers and visitors to the community. So this is what you need to do, and there's a link. There's a link going to be posted in YouTube to verify, and it should be posted in the Trader Lab also. Please verify. And if you're not a subscriber, I want to mention to you, go to bookmap.com. You'll see the subscription choices, And if you're not a subscriber and you want to, as they say, put your toe in the water, you can get a free version, a digital version of Bookmap with data. It's crypto. You can look at it. The key to this is see how the tool works. You'll see more, of course, in the streams and the education, but it's kind of like get your hands on it. Because for me, I call it the tip of the spear. Now, grab your pen and paper. We're going to take down some statistics. So these are the levels. Now, the micro composite, where'd it go? This 37.50, which is right here, is the retail price for this whole region. Yesterday's highest volume or retail price is 49.75. So you know that, okay? Make a note of that. Now I'm going to come back to today. Maybe. Let me got so much stuff here. Okay. So let me just move this over. Yesterday's settlement. So we're opening higher inside of yesterday's range. The ETH high is here. The ETH mid is there. That 37.50, which is the intermediate time frame, retail price is over here. Yesterday's retail price, these are all the things I showed you at the top of the stream, is over here, 49.50. Now, here's some statistics. Write them down. Past performance not indicative of future results. You got to vet everything for yourself. So we're opening higher inside of yesterday's range. And by the way, Stephen, if you could post the link for subscribers, if they're in YouTube, to confirm their, verify their subscription so you can get additional access to my real-time streams in Trader Lab. And also, by the way, if you're in Trader Lab, you need to take care of that immediately, if not a little sooner. And please post that also, or maybe we can get Dan to do that, to post those, please, for us. Thank you. So here's statistics. Remember, this is the fair price, and this is important. So to take out the overnight high, there is a 69% probability we'll get here. And we're opening here, don't forget. To take out the first hour's high, which is called the IB, 67% probability. To take out yesterday's naked volume point of control, and a point of control, if it hasn't been tagged or tested, is called naked, 67% probability. So the stats are favoring the upside initially. Okay. Now, the overnight mid, 72% probability, and the overnight volume point of control, 82% probability. There's the overnight volume point of control. So we're opening here. So our probabilities, and we're opening under the main. I know I'm talking in multiple time frames, so that may be confusing. That's why I started with the higher time frame. This is the retail price for that whole consolidation. Yesterday's retail price is here, and the ETH retail price is here. So we have three retail prices. Why is that? Well, this is the whole enchilada. This is the whole consolidation. So that's like the biggie. The last auction said this is the value. Yesterday's auction, so I'm going kind of sequentially, if you will, actually I should go this way. Higher time frame, there. Yesterday, most recent auction at the time, until ETH is there. ETH, most recent valuation of how much is the tuna? There. So if I open here, and I'm opening in a fair value, let's think of this logically. This is a fair price. I can go down, of course, or I can come back here, retail in a higher time frame. But what else do I know? My ETH high is here. Is this too high? Well, nobody knows the answers. This is part of our joy of trading. And then if I can get through here, then I'm looking for this. So that's the lay of the land starting out. But there's another piece to this. If we're in this area, we know we're at an area of agreement more or less on price. And what else did I show you at the top of the stream? The market sold off yesterday. The market goes up to go down. The market goes down to go up. So we're looking for go down to go up or go up to go down. Statistics lean north, go up, and then either go up, keep going, which makes no sense to me, but it's not for me to, it's not my job to know, because I can't. Then my job is to align and change and I hope you got something out of this. I know it's a little long, but you know what? In the Trader Lab, this is all the stuff you got to do before you sit down and actually put a trade on. Because based on your analysis of the possibilities, not what will happen, but the possibilities, you have a trade plan that helps you align with what you anticipate. Then here's what happens. You narrate it and you have structured trades. And as the context, and that's what I'm talking about, as the context develops, you're going to be pulling out different tools in alignment with statistics as soon as you can recognize what's going on. Now, here's what I know. What do I know? Great question. RTH open. Now, this yellow line is developing volume point of control. Now, developing volume point of control is what this is, volume point of control. That's a volume point of control, higher time frame. This is the ETH, volume point of control. The yellow line is the same thing, except now we're in a developing time frame, so it's going to take the volume, measure it, and then tell us really where the retail price is. Of course, the challenge is pricing is changing all the time because it's dynamic. So here's what we see. Test here. So when I'm looking at this, now this is 5 seconds in. Under conditions that I can relate to, if I open here and go down, I'm seeing initial sellers. But what do I know from yesterday? The market is short. So that doesn't mean the market won't go down and get more sellers and then squeeze them out. It's a possibility. Anything can happen. This is trading. So here's what I see. Too high, I break low. This now is the new retail price. I'm looking for it to break down for continuation. What do I know? It crosses, when it comes across, then my next location, 82-ish% probability, and you have to vet these for yourself, is right there, overnight volume point of control. And remember, this is the big magnet above, 3750. So I know I can do anything because this is trading. We don't know. So don't think it's about predicting. If you can predict something, you let me know, because I can't. All I can do is try to read it and then wait for it to come to locations for a potential trade. Right here is a potential short setting up, but I'm only in 3 seconds and it's too low. And this might be the low of the day right here. I have no idea. So I'm going to label it. I call it a variable high volume node. Now I'm going to go very slow and intentional in the beginning. If you have questions, post them in YouTube or the Bookmap Discord Trader Lab. I'll do my best. And this stream is available for you guys to review. I'm going to make it available through the weekend. Even if you're not in the Trader Lab, you'll be able to watch this if you go out there on YouTube. So this is too high. What I know is too low, retail, and what's too high is that. Because if this price is too high, I can go down from here. That's what I know. Look at the behavior. So here I break down. Now right here, so what I know is this is too high and I break down. But this was right here was too low. Let's think of this like support resistance, okay? So too low, too high, break. Now I don't have a trigger here because I need, if I was going to get into this, I've got to sell it here. And once it breaks away, I can't do anything. And this is very difficult because we're in here like 4 seconds. And I always say, just so you guys know, and if you're visiting, this is not a place developing traders should trade unless they have a vetted, in other words, a vetted setup for it, or structured trade. This is a structured trade, but it is not where most traders should trade. And part of that has to do with the speed And it takes a lot of competence to be able to execute in a timely fashion because you have to get risk neutral. And here's the other issue with this. This was too low. So if you're getting into this trade, this is really support down here. Now, if you take it out, fine. But when I put a trade on, now the thing that supports the short is this, which is a level. Because let's talk about the language of the market. I'm spending some time on this. I'm not here to dazzle you. I can't. I'm here to show you market mechanics and how you might use tools for alignment. If this is too high, I can reject it. It's no different than rejecting any other high volume area. This is the same thing in a fractal. It was too low. That's why we rejected it. All I did was come up to another level and reject it. Bang, down I go. Okay, now let's talk about what we know. We know now this high is the opening swing high. We're going to label it. This is very important. And I think it's very easy for traders to just not even think about it. Opening swings are high. And why would an opening swing be high? High. Important. Because that's where the stops are going to be on each of these swings. And the possibility is that we're going to come back and we're going to test those and take the stops out. And I call that fuel. So we never want to forget where the fuel is because of the possibility to come back. So we have opening swing high over here, opening swing low. Now, I don't know this is the opening swing low until it is. But right here, that's my short that I can't take. Now, what do I know? I know the market is short. My preference for a long is after I get new selling. It could have been this. There's my sellers, and then we squeeze them out. Now, the guys who had stops here got taken out, but then we got, remember, location, sellers, too high, down, going to zero, right? Don't know. Soon as now right here, we come across here, we come across here. This is the last place where it's too high, too high. So this is now a variable high volume node. Let's just track it together. It shifts lower, as you notice. So what that is saying, remember, this is language. So the market speaks. Too high. Too high. Now this is too high. Looks like it's going to go down. Let's see what it does. Right here, we hold the mid. So this is resistance. This is the opening swing high. Bothers me. Should see you. Have an H. And I have statistics above and I have statistics below. The market is short. I have new sellers. Buy stops are here. So now if I don't fall out and I come back and remember what resistance was, this and this, I'm above here. So I have a suspect. This is resistance. This is resistance. So that's what I know. And if I did take a short here, I'd take a stop. So if I didn't, but now this shifts up. This is suggesting too low. So what you're seeing is, what this is representing is volume. So as the volume, and it starts at zero. So it's very tricky in the beginning because this is going to move around. But that's what the auction is. So watch. So I pull back. Where's my support? Now it's here. This is dynamic. So I'm labeling these as they're moving around, especially early on. So I'm narrating. I'm going, this is too low. This now is too low. It's over here. So too high, too low. I take it out. I pull back. I get VPOC migration. This is a potential long in the Trader Lab here, and your stop has to be under here. This is support right here. Variable high volume node. This is a long. If you got long here, your stop has to be under here. If you get long in here, your stop has to be under here. This is where the stop has to be. See it? And what's this over here? Variable high volume node. It's also the mid and the VWAP. What's more important to me? If this is here, is this. Why would it be important? Because it's the shoppers. Remember, this is a shopping experience. If you've ever gone to the supermarket, you can be a trader, at least conceptually understand what the market is doing. It's the participants are shopping. And the other part of it is the auction is about determining what's too high, what's too low, what's too high, what's too low. And it does it at all time frames and fractals. So here you have your chop, chop, break high, test. Here, test, long, longs. All these are longs. So this is trader lab. Now, any questions on the longs? Yeah, thanks, Dan, for putting that in there. By the way, guys, if you're in YouTube, remember you do need to verify um, your subscription in order to attend additional education in the Bookmap server, including the Trader Lab, live narration, which will be taking place. And there's no cost, and there's no cost to do this. By the way, you can download a free subscription. Knock yourself out with that. You're going to get your hands on a tool like this. Is incredible. Now, what I do is I use order flow to read inside of these fractals. So when I'm talking to you about this yellow line, which is high volume, it is in the developing time frame. So it's showing me whatever this yellow line is where the highest volume is at the time. Now, what is happening inside? Now I'm going to take you down into more microstructure. This is how I navigate the market. And I'm overlaying multiple pieces. You do the same thing. By the way, what's this? Highest retail price in the intermediate time frame. I showed you at the top of the stream. It's a target. Now, what I always do is I always give it like 2 ticks. Everything. Why? Because I'm not the only person that has figured this stuff out. And and look, it tags it to the tick. Do I know it's going to do that? Nope. You don't either. So I call it horseshoes and hand grenades. So for me, this is an obstacle. Why would it be an obstacle? You're going to learn a lot today, and especially if you review this over the long weekend. The reason this was support is the same reason that is resistance. This is a higher time frame of the same thing. That's why you see this. Does that make sense? This is the auction. I don't use indicators. Now there's something more. This is the VWAP in the mid. Now, what do you do about this? If that's resistance, what do I want to do with this? Do I get long at the VWAP in the mid? What do I do? Well, I don't know, of course, anything as far as what will happen. But let's talk about what we know. This right here, right here, market's going to the moon, right? What happens here, though? I have my buyers. Now, we're going to get into order flow. Now, I can see here that I might get a rotation. Why? I have buyers, and I see selling icebergs absorbing. These buyers were absorbed. Look at the reaction. I come back to mid. What's over here? Micro volume. I'm going to put a little line here. I just want you to see how I organize this. And I don't put the lines in when I'm trading. I know, I just look at the profile. See, this is something, but for you guys to see this is a consolidation. There's your rotation. Remember, shopping. Oh, it's on sale. I'm not paying that. And in the middle of this consolidation, this thing, chop, 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 is the volume. It shows right there at that node, that's the highest node sticking out. That's a high volume node. If I break away from it, I can return and test it. If I break away from it, and what's up in here? A high volume node. Now, I don't know anything about this until it happens. So I'm just telling you, I'm clueless. Because this could have just gone from here to here, right? So no way to know. So I come up here. Let me draw a little box around this. This is a consolidation. So just doing this to help you guys see what's going on. So in the chop, 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 So right here, I got my buyers, I got my icebergs. This is how order flow can really help you. Now, the thing is, I don't know. There's nothing, we want to get an edge. We want advantages. I have an advantage with an order flow tool. I still can't predict anything. What I can do is understand why something happened and also what might happen if we come back here. So I pull back here. Now this is a potential long. It's the mid and the VWAP. This is my obstacle. I also have statistics above me. This has a high probability. Remember, ETH high, I gave you the stats at the beginning, almost a 70% probability. So I know this is resistance. I have a 70% probability there. And up here, which is where I'm going, I mean, I'm going until it doesn't go. You know, how do I know? I don't know. That's about a 67% probability. So in my mind, it's longs currently to there, which we had, to there, to there. That's the lay of the land for the long side at the moment. And don't forget what happened yesterday. So I get my seller right at my location. I see the break. Now, I can get long here, and I know this is an obstacle, but I also know there's going to be stops here, and that's a target, that's a target. So this is a long. Now let's see what it does. Right here, look what we get. Isn't this a shock? Not if you're in Trader Lab. This was too high. Hindsight. Now I know it's too high. What else do I know? These buyers were absorbed, and there's the icebergs. I also know that anybody who got short has buy stops, right? So what do I know? If I get a long, the sellers were here. Might they show up again, you ask? That's why this is a scale. It's right there. Trader Lab. Now we pull back here. What do I know? Well, mid and VWAP. I also know there's support here. So let's see what might happen. I'm still going for that and what's above. So let's just see. Pull back to mid. Now let's come back over here. What happened here? Wasn't this support, absorption? Bang. Mid and VWAP. This is my support. Bang, into resistance. I pull back here. Where's my support? It's under here. It's under here. VWAP. You want to buy the VWAP? It's up to you. Mid. Support is under here. Where's my resistance? Here. What's above here and here? Buy stops. Now it's up to you. Do you want to scale there? I don't think that's a bad idea, do you? If you got long here, you would be risk neutral. You'd be sitting here with your stop under here. If you get taken out, you're out, and you take the next trade. This is the real world. Or if you micromanage your trade, you're going to get taken out. It's up to you. You got to vet your trading plan and know where your edge shows up. Not on the last trade, but on all of them. Pullback, support, long, scale, same trade. Who knows? Now what? Breakthrough, target. You see? Now, what do? What's resistance becomes what? Support. Let's just see what happens. Resistance becomes support. Support. North. Now we have a target somewhere up here. Where is it? There. So we're going for this. Now let's watch. Is everybody tracking before I continue? Are you guys with me? You getting something from this? Are you finding this interesting? Are you guys tracking? Give me a thumb up in YouTube. Let me know you're conscious. When I hear a thud, I think somebody hit their head on the keyboard. And if you're finding this confusing, trading is confusing. It is random. However, what you can do is you can learn to interpret the market based on how the participants behave versus your indicators. And I know we all start in the business with indicators. For me, I started in the business when indicators were just starting out in 1980. Wells Wilder, very exciting. Now, let's look at this. Market comes up, it's going to the moon. Now, what I'm doing is I'm always looking, I'm seeing my buyers, the aggressors, and this is the delta. Delta is aggressor, and aggressors are buy stops and new buyers. So now this is the stop and iceberg detector, and this is something that I've observed that I really like, and this is why I think it's a great tool. We can see the icebergs, so the buyers are absorbing these sellers, but who else are the buyers? The shorts that are getting squeezed. Remember, the market goes up to go down. The market goes down to go up. What did you do yesterday? We went down, which is why we're looking for the squeeze today. Elemental, the market mechanics. And that's what TraderLab's about. How does the market work? Why does it do what it does? This is why the market does what it does, and it can do anything anyway. Buyers. Now, right here, I only got 2 buy stops going off. Buy stops are market orders. 61 going to the moon. What's here? 3. Now, and I don't know. Here, no clue. But here's what I see. Let's look at this. As we break low, so right here, I have 3 buy stops. I call that stop divergence. Well, look at all the stops. Then what do I got at the high? Now, I don't know right here. Don't forget that. I don't know. But I see the sellers here. So I'm seeing selling icebergs, and I'm seeing more sell icebergs, and I have this thing. Okay, and these are sell stops now. Only 3 at the high, 24 coming out here. So now I can look at this little structure and go, well, maybe that's too high. Right here. Let me take this back over here so you can see it. So right here, I've got my volume. You can open, this is the beauty of Bookmap. I can open this up and get as granular as I want to get. So right there is the high volume, right there. And you see a little consolidation. So let's just put a little box around this thing, and then we'll look and see what happens over here with it. So what do I know? Too high, too low. So my buyers, we have exhaustion here. My buyers were here. My sellers are here. When you break below this buyer, there's a problem in River City for the buyer, potentially. I come back and test the volume in this fractal. Consolidation, that's all it is. And if it's too high, we can reject it. See it? And anything can happen. I have no way to know anything. If I did, I would skip the trades that don't work. You would too. Where do we come back? Back here. I know what might be, underlined might be too high. So this is the choice with this. Right here is a sell trigger. If we think the market's going higher, how do you use this? Would you short the market? Well, I have a statistic almost 70% on top here, so I can't sell it because I'm going to only take longs in this condition. Now, but this is a sell. Here's where your trade plan comes in. Is this an exit for your long? Or, this is the joy, or is your stop way out here somewhere and you're just going to ride them cowboy, like being at the rodeo? Now, this might not be an exit, but when you're seeing, look what we have. Rotation down, test, failure. Deeper rotation down. Chop, chop, chop. Now, right here, you might bail out of this thing, or here if you get it, but there's nothing saying it needs to test over here. You would have to know in your trade plan what you're going to do. For me, if I'm sitting here and I see this, not only is the antenna up, but the alarm bell's going off in my head because I'm going, uh-oh, if I can't clear this, then that. And this really confirms the potential to return down here. Now, so far so good, guys. Now, VPOC migration. Okay. Going higher, right? But what happens? We do the opposite. We break low. This is a change in context. Right here, things change. And this is very important and very difficult for all of us. Where am I? ETH high. I got it. I didn't get up to the IB high, and I'm underneath the intermediate time frame high volume. So I've just gone from directional and I've changed context. This is like going from the Autobahn into the mountains and winding curves and slow down and shifting and all that stuff. This was longs. Now it's rotation. So this is called context, and this is a change in context. And of course, with anything in trading, you don't know until hindsight. So this is too high. So what do we know? Too high, break low. If I don't get above this and get above this, then south of the border. Support is here. Notice. So I got support here. Resistance now is here. I break down. Where is my support? It is there and there. What happens? Just watch. Support is here. If I took a short here, and I'm not saying, I'm only going to say if it's part of your plan, in TraderLab you would break, and then right here is a potential short to here or to here. Either one is okay. This shifts down. This now is too high. I'm going to label it. What I'm doing is I'm just following the valuation and changing perception of value and price. I don't know what the market will do. I have no idea. And when the market context changes, I deploy a different plan. If it changes back to something else, I got to change the plan again. And I'm not changing it. I'm just like shifting a gear. So now, where was that opening swing low? It's there, right? They haven't been taken out yet. The market is long. Remember, the market goes up to go down and goes down to go up, right? So, too high, short, where am I trying to go? Here or here. I also am aware of the opening swing low. If, depending on your experience, you'd be going for the stops because you would know everybody is long. And where's their stops? Under the opening swing low. So once this happens, then you can, subject to plan, sell here, look for this or this, and then out the bottom. And then, and this is like where the fuel is. I call it fuel. Stops. Now, for me, right here, this is going to set up a reversal, and I don't know it. So what do? I just manage my trade. Where's the high volume? There, here, look at it. Because I'm clueless, and I can prove it. High volume is here. I'm not going to put a little line here so you can see it. So what this is the auction. So all I'm doing is I'm looking at the volume, and I'm keeping an eye on the high volume areas. The reason is this is high volume, and in here is high volume. This is a fractal of that. What's fractal mean? Think Russian dolls. It's all the same. Multiple time frame. In the intermediate time frame, remember, that's the high volume. All I'm doing is sloshing around a higher time frame retail price. But what have I done? I got the longs in the market. I have my opening swing. Their stops are going to be under here. That's what I know. So I'm trailing my stop. When I break away, my stop can come here or even over here. So over here. Once this breaks, my stop is here. I get taken out. Okay? Now, what do I know now in hindsight? Well, this now is too low. It's right there. Going to mark it. I don't have to mark it, but I'm doing it for you. And now I took this out. So this is no longer resistance. We blew through it. So now I'm back into a different, we're in a context. It's called mean reversion. Let me just remove it. You don't need this now. So this is too low. Who knows? Now, this is called mean reversion. Now, when this happens, I have no clue because I'm minding the store on a short. This happens, I'm surprised. Now what I know is the following. First of all, up, then down, and now if I come back, it is rotational trading. So right here, I don't know if it's going to keep going or if we're now going to squeeze the shorts out. And when you get into this kind of trade, it is really, it's my least favorite, if there is such a thing, because I'm always going to be out of alignment with it. Only in hindsight do I know that I'm back in a rotation here. Right here, as far as I know, it's going to keep going. Okay. So I get taken out. Okay. Now what comes in? It's too fast for me right here. I can't do anything. What I know here is resistance. I also know I have my statistics open on both sides. I have, remember, this, and I have statistics down below too. I have settlement, and I have yesterday's low as a possibility to get taken out, or yesterday's high. But I'm not bullish here because I'm thinking I'm squeezing. So I'm leaning more to the south side, but as a trader, I have to be open to whatever happens. So this is resistance, and it could be here too, right? So I get my reversal. I cannot do anything with it. This is resistance right there. Right here, I break above it. Right here, I'm looking at this and I'm going, I got to get long. Let's look at something. Let's see. Let's look very closely now. Where do we come? Right there. Resistance. There's a reason the market behaves like it does. So I hit my resistance. Now what? Are we going to get through it or are we going to revert? We revert. This is called mean reversion. So what I'm doing is outside, I'm crossing across the volume back exactly here. Clueless. Back here. So this is what's called rotational trading. It's nasty. I don't like it because it's very difficult now. If you don't want to trade here, you want to try to get outside and come back to this. This is the mean. So what we're doing is we're coming to microstructure or micro mean out here, which came from to the left. It's too high. We come back here. Now, two things can happen here. We can do this and come back here, or we can come under. The better trade in this configuration, because it's two-sided, is to wait for it to come under. That's the better trade. So this, I cannot take a long here based on my plan. I come over here again. It's resistance. We break through. This becomes support. Let's watch. And this is the potential target up here. So you would have to have taken this trade here to be able to get to here. So for me, I don't have a trade. Just saying. So I'm just sitting here going, But now let's look. So I now get my volume in here. It's high volume. It's a consolidation. I'm going to label it just so we can keep going. So right here, and I don't know, I'm like you. I go, what's going on? I don't know. So right here, chop, 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 break, test, absorption. You see the icebergs. You see the absorption. This is how all this is coming together for me using order flow. Now, right in here, I have my buyers, and they're not going anywhere. Here's what you need to understand about order flow. What is going on? Why aren't we taking this out? There's my buyers. This is not about green bubble, red bubble. It's about what happens. If I see an aggressor here and the market does not keep going, why would it not? It's because there's a passive participant. That's what the limit order book is, and they're absorbing the buyers up here. But I don't know until I see this. Now I go, these guys are getting absorbed. My seller is below these buyers. So right now, these buyers might have a problem. So my sellers are here. Where are the buyers? They were here. So I got buyers out here. Sellers are here. They get absorbed by the buyer. So what you would think about is sellers absorbing buyers, buyers absorbing sellers. Limit order book, both sides. Now, so this is my box that I'm in, consolidation. So my buyers are now above these sellers, which means they're back in control here. And I come up and my buyers are here. I see a selling iceberg and there's my absorption. So the sellers are here, right there. So I know if this buyer gets above here, then there's going to be a squeeze and the buy stops go off. So why not? But instead, the sellers show up here and I'm still consolidating. The buyers have not been able to get over this level or out here. Is everybody tracking me? This is order flow. I break away from it. Too high. Notice where I come back. Where did I come back? Let's just all stay together. Too high, break, trigger. You come back here. You come back into here. This is a short in Trader Lab if it's in your plan. Or if it comes down here and it holds, it could be a long because you're going for a statistic. It's all up to your plan. And we all take stops. So let's look at the behavior. So this is too low right here. Variable high volume node. So if I come back here, let's look at it. Now, I don't know where the market's going to go. So I can't, that's not my thing because I don't think it's anybody's thing. I know that once this is too high up here that I'm going to come down and take stops. I don't know how far it'll go. So right here, I've got volume. I don't see my buyers getting any control. My sellers are here. There's my volume. You can see it right there. Here, same thing. Here's my volume. I don't know anything about it right here. I break high. This is too low. These guys were absorbed. I break over here. So this is resistance. This is nasty. This is this mean reversion I'm talking about. It's outside in trading. Very difficult, very nasty. Don't like it. I take more stops in this in any other context because look what's going on. See, so if you're trying to get long, remember, you can't trade in the middle. You come outside to resistance. You're thinking it's going to go higher. It breaks lower. So you're in two-sided trade. So as long as it's doing this and we're sloshing over this here, you see, this is what it is. This is called balance. Now, what happens in balance, while I'm showing you these little microstructures of consolidations, this is the same thing. This is a consolidation also. It's two-sided trade. You've got your sellers up on the high end. You got your buyers down here. And what else do we know? The market was short, and we were looking to squeeze the sellers out. And it can go either side. The probability is to come out the bottom because the market goes up to go down. And yesterday the market went down. So this morning to go up. And if we can't get traction on the upside, then the longs in here from today are going to have a problem. So we don't know where that is. So that's just, but this is quite a bit of selling, isn't it? So now we know this might be too high. We don't know. So let's see. This is a potential short. Now, right here, I don't know about it. Comes down here. It comes up here. I know this is too high, and this might be a problem here. I break. I come back here. I break. I'm getting that sense that things have a problem. I break under the IB right here. Right here, we have a structured trade. Now, this kind of stuff is a real pain to try to operate in. I break down. I get the value area low. Now, there are ways to enter into this for a short, but I'm going to talk about a structured trade because there are other trades here, but I'm going to stick to basic Trader Lab. This is called the IB continuation trade. And what it is once you come out the first hour's high or low, and remember, statistically, we're leaning north, but remember, statistics don't know anything about context. What's the context? South. What has the market been doing? It goes down to go up. It went down yesterday. It went up today. What did it go up to do? Get more buyers and maybe go and take out yesterday's high. Or, more likely, get the buyers in and then go and take out maybe yesterday's low. Not a trade recommendation. Once I break down here, I'm no longer in rotational trading. I've now shifted into directional trading. Changing context. This is a short in the Trader Lab. And I put this one on. So this is a short structured trade Trader Lab. Let me show it to you. Now this chop stuff is very difficult, and it's easy to take a lot of stops in it if you don't recognize the condition, and you have to be extremely patient. Here's the trigger. Let's look at this thing. So first of all, location. Okay, breakdown. That sets up this trade right here. So we don't know where's the short. I don't know. There's high volume, break high. Where am I going? I don't know. What do I know about this? This was the reversal, remember? The opening swing low. I marked it. That's where this is coming from. I come back to it. I test the opening swing low reversal that went long, remember? It's right there. Isn't that interesting? And I have my structured trade right in here. So now I'm looking for a trigger. Where is it? Look where I am. Look where I am. Now, where's the volume? It's here in this thing. Wait, I got to get that off there. Okay. I got high volume here, which is right from this. If I'm looking at this and looking at this, this is a trigger. Now, you got to be experienced to recognize this. Well, let's assume none of us are experienced. We're all hanging out. So where's the high volume here? It is there. So I got microstructure here. I've got my volume developing in here. So let's just look at it. Notice where we go. Notice where we test. So this is a short. Stop over here. If it's not your thing, because I understand if you haven't developed unconscious competence, you will not be able to activate that quickly. You will if you practice, subject to, your ability to think quickly. But here's your test. So this is the another entry right here. So you got an entry there, you got an entry there. Now, where are we trying to go with this thing? Before we even get there, where are we trying to go? Settlement, ETH low. Those are our targets. And then there's more down below. And if we get going down here, and let me see what else is down here while we're at it. And maybe lower. But this is next. We have a target at yesterday's low. So I'm still only on shorts now. I haven't looked to see what's been going on. So I'm only going to be taking the short side. So short. Then you got to get risk neutral. Notice it came up here again. Gave you another opportunity there. Short there. Short there. Still don't know. Microstructure here. It's all shorts in the Trader Lab. You have all these opportunities. Now, where's my volume? Here. This is called fractals. I got volume here. Let me get over here. So now I got this. I break down, I have volume here. If I break below it, It sets something up. What does it set up? This. Entry here. Break. What does this set up? Let's look at the volume. Entry there. You see? I can do this, and I can use the same structures for trade management. And yes, I'll get taken out because there's always counter rotations. It's just the way it is. Sometimes you got to just suck it up and say, hey, that's the way it is, because it's random. Here's my volume. There's my trigger. There's my retracement. Do you see it? Do you see something consistent here? Micros. So break, test, short. Whatever you want to do here. So let's look at how we might manage this. Volume is here. I'm going to just throw a little line over it. We don't want to forget what this says. This is language. Too high, too low, too high, too low. Fight at, it's like a shootout. And there's a trench here. And then when you break away, it's too high. I have the ability to come back. What happened right here? Same thing. Micro, a fractal, sellers. Okay, going to zero, Lewis. By the way, that comes from trading places. Right here, fractal, break low, test, going lower, right? Who knows? Out. See? So you would, right here is resistance. So now you may not like the idea of giving a few points back. That's up to you. Me, I'm okay with it because I have to be. Why? I don't know where the high or the low or anything is. I don't know. But what I know is I'm going, my targets are lower. Yesterday's low, right? Wherever, and down lower. Maybe even down here. We had a target. We had actually a target the other day. It was 78.50 and 68.50. And I had posted these. Yeah, here's the 68.50. So I got this and this. So these are targets still, not recommendations that can do anything. Remember, it's not my job to predict. So this is too low. No way to know. It's like, yeah, that's nice. Okay, trade's over. Now what? So right now, so if we're short and we get squeezed, now we got to start looking for continuation trades unless we come all the way back inside. So let's look. Notice what we did here. We tested this. Now I don't have anything in here. So let's just look. So I don't have a structured trade I can share with you in here. I have to look over here to see if there's any structure. Yeah, I don't have a structured trade here for you guys. I mean, here's something you can think about. Because what I talk about here, I'm trying to keep this at a simple level. We know when here, let me come back here before we get that. We know what these are over here are distributions. In other words, this volume in here, this, if you'll notice, this is what a consolidation is. It tapers at the top, it tapers at the bottom. That's what this is. So when you're looking at your consolidation on a chart, I'm looking at the same thing, but I'm looking at it in volume. That's all this is. So when I break away from it, my high volume is there, and I break out of it. That tells me that I have the potential to go higher. Then I've got to look over here and see where was my consolidation before. Well, I had one over here. And so what we have is this. If I break away from this, I can come out into these. And this is where the big volume is that I broke out of. So this is called the low volume node. So I know out here was the outside edge of this. I'm going to make just mark it so I don't forget where it is. Well, sorry. It's called a low volume node. Let me just throw it in here. And these are approximate levels. The market, they're edges. So by edges, outside edges of consolidations. And there's always stops at these outside edges. So if I come into that area and I see exhaustion, I want to fade it in this context to come back here. If it does. So I don't know. Remember what it does or if it does. So this is an outside edge here. And there's the outside edge up there. So we fell out of that one. And now we're coming across this one. And then the other edge is here. And you can see they're sequential here. So I have it here. I have it here. And you can see where we come. I come to the top of this also. So the outside edges of these consolidations are where the stops are. So, this is a good place to hide your stop, except the market, if it gets rolling, these buy stops are going to create the momentum. And then notice this. So you get this, you get the stops, and there's no way to know. Let's go back. No way to know at all. So so the volume here, and as far as I know, it's going to keep going. If I break below this, I can treat it like I do anything else. I break, I test. Right here, I have a consolidation, and I got to an outside edge. And there's no precision, unfortunately, in trading. It's out here. That's all I know. Out in here. So I'm looking for it to come back, and it could do anything. So if I'm using order flow, which I, of course, do, I'm looking to see exhaustion and a trigger. So let's say I'm looking over here. Well, what do I got? Buyers. What's happening here? Buyers. What's happening here? A little rotation. Where's my seller? Buyers. I'm above that buyer. I had absorption there. The buyers are still in control. Buyers are in control. Going to the moon, Alice. What happens here? Nothing. Sellers. My buyers are up here. They might have been absorbed. Break low. This rotation down is the largest rotation down I've had since this whole thing has started. Change right here. So now I'm looking at this volume and I'm looking for a test, and it needs to stay below here. That's your short. It's advanced, so I'm not really suggesting anybody do this. Once you can think in multiple time frames, and let's use the term fractal, then you would be using these structures in relation to this. So this, we can't cover all of this in simply an hour and a half, because this is real, but this is really the fundamental basis of how markets work and why they do what they do, why it pauses and chops, why does it rotate and squeeze and then continue on. If the market gets short, remember the market goes up to go down and goes down to go up. Market goes up to go down, and then it'll go down to go up. Well, if the trend is down, anytime it rotates up, at this stage, you want to be a seller. For me, buying is covering. It is not longs. I'm not saying that's just me, because I know I am under. Let's come back to all the things we know. I'm below the intermediate time frame high volume, which was the retail price. I tested above it. I found my sellers. Now I'm below it, and we're not willing to pay it anymore. This is the current retail price, and we're not paying it. We've left it. We've left all of these areas. We took out the first hour's low. See you later. We took out the overnight mid. We took out the overnight low. We took out the settlement price. We have now taken out yesterday's low, and I guess we're making new lows. And I know, possibly, I'm going for what? 78.5, and more likely 68.5, and it's not a trade recommendation. This is in my trade plan. And whatever happens, happens. In between all of this, it's trade management. That's it. So what I do is I just manage the trade. So if I get on a trade, I get short, I manage it. It goes like here. There's my trade management. Break, test, no problem. Here, break, no problem. And this is how I manage my trade. Did I get taken out of trades all the time? They go on afterwards. They go down 100 points. I'm not in it. I have other ways to get in. It just doesn't matter. It isn't the one trade. You build your business on a large sample size. So let's look here. Too high. Remember, too high. Too high. This is your volume. Sellers are in control here. Buyers tried here, not so much. This is too high. You could see the volume. Here comes down and I see reversal. Now, if I'm only being mechanical about this, this is where I'm out of the trade, here or here. Or I have a location here. This is really higher time frame. Not going to get into it. But this is, you just have to manage your trade. I can't tell you where the high or low of anything is. But I did take out yesterday's low. So if I come back inside the range, I can come back and squeeze. I don't know. It's not my job. I just get out of my short and wait for the next trade. Any questions, guys? Thanks for your patience. This is what we do at TraderLab. By the way, if you're in YouTube, remember this stream's available exclusively to Bookmap Discard TraderLab participants. It'll be available through the weekend and the holiday. If you're interested in the TraderLab, it's a no cost to you to become part of TraderLab community. It's a community of like-minded traders who've come together to leverage their collective experience. There's not a right or wrong way to trade. I can tell you it's very simple to figure out what a right way to trade is. Do you have a statistical edge? Can you measure it? The measurement, by the way, is not the random outcome of trades. The measurement is about understanding that waiting for a trade that actually has an edge. We all get winning trades. If you threw a dart at a board that said buy or sell, you would land it on a buy or a sell, you'd have winning trades. Doesn't have anything to do with anything. We all think that's trading, but it's not. Trading is understanding the condition of the market, who's in control, who's off sides. And if you even get a rotation like this, if you want to be a seller, you need to be looking at structure. And out here is a low volume area. So what does the market do in all fractals and time frames? It could do this. What did we do up here? It's the same thing. It's this. These are consolidations. If this price right here is too high, then, and this is the retail price here, we may only just do this. You see? So I can slice and dice the market, and this is what the auction is about. And then if I know where my volume is up in here, which is right there, and I come to an outside edge, which is here, and if I stay in this area, I know now I have to watch the market right here. Right here, I'm going to just throw this in here. Now this is micro. So it's not necessarily anything anybody should do unless you have excellent execution and you can read this, because this is the sellers. They are here selling icebergs. Micro high volume is there. So we're going to look at this. This is the outside edge. So it could pop through here and reverse. And then it would do this. This is called mean reversion. And remember I was talking about mean reversion early in the stream. So this is it's all about time frame and fractal. Well, this is an outside edge. Now, if I get through here, I come here is the next location and out here. So I'm just saying is I know that before we get there. So the thing I'm going to be doing is watching for behavior. Now, the market is short. Remember, market goes up to go down and goes down to go up. What you don't know is how far up. Part of the joy. So what do I know? This is an outside edge, and I have micro high volume sitting right here. If I don't get a test and a rejection, then I have nothing to do here. Then I'm going to look at the next areas. That's exactly how this might work. So let's just watch. These are not trade recommendations. Outside edge of this consolidation. There's going to be stops right in here. We want to see what happens right in here. If it pushes through, all I'm going to do then is be looking, you see, in a different area. We have some sellers here. So let's look now. And again, this is not a recommendation. I take stops like everybody else does. And sometimes, in this business, you got to get over it. We don't like stops. I understand. If you run a business, nobody likes paying bills either. It's cost of production and overhead. Remember, if I push through, I have nothing to do. So this is an important area to observe. Micro is right here against that. So you'd be looking, observing this. It's not a trade because this is really funky right here. You just have to wait on it now. So this is important, what happens right here. We'll just watch it together. So when I'm doing this, I'm looking at this and I'm going, so I'm ready. If I see, and I don't see what I need to see, but I'm pretty close. You know what I mean? I'm not calling trades because, for me, if I put a trade on, I might exit it right here. So you have to really be able to read it. And right now, this is a suspect, okay? What's important to know is I've identified the location beforehand. I'm waiting for it, and I have levels, and I'm waiting to see behavior. The word confirmation doesn't exist in trading because by then you've increased your risk in exchange for certainty. I got a buyer here, and what I need is for this buyer, I need this to get under this guy to consider doing something. Let's watch. This is like waiting for something to ripen on a tree. So buyers are here. The limit order, the limit sellers are here. What needs to happen for this to trigger is for this buyer to get buried. So this is a potential short here, not a recommendation. Let's just see what it does. Are you guys getting something from this? This is not a trade recommendation. I take stops all the time. I'm trying to show you structure and how you can use fractals and the auction in all time frames and fractals to consider locations to interact. Now, so what you got is a buyer here. Buyers are absorbed up here. This guy is here. We would like this to get under this guy. Otherwise, the buyers are here. The sellers are here. So now you got to watch, not a recommendation. For me, if I get involved, my stop can be here, and I take more stops than most should because I'm doing in this. So I consider it like a probe. In other words, I don't sell this, so I would be out of this trade if I took this. And now I'm pushing out here. So that's okay. That's why this is not a structured trade in TraderLab. Any final questions, guys? I got about 10 minutes. But I want you to see the structure. By reading the structure, I know where both sides are. And if I get involved here, then I can have my stop here. And it's not a recommendation because this might not be a good way for you to operate. I operate this way. But what I know is I got shorts in this leg. So I know that also. So I know they can get squeezed out. So I just have to accept that. Now, where's my next area? It's out in here and here. Because stops are going to be here. I also think about where the swings are. In other words, where's the stops? retail traders put their stops behind these swings. So right now, there's nothing going on here. The next area is going to be up here. Let me look a little further. Now, we got under yesterday's low. For all I know, it's done. And again, doesn't matter to me. What matters is now I got shorts and they're getting squeezed out, which is fine. And then I'm going to be looking at these locations. So this is the next location out. Well, there's two. There's this one and then this. Questions, guys? If you're in YouTube, please give a thumb up. Also, remember this stream's available for you guys to review over the weekend. This is a difficult context to operate in. What this is we started out directionally to the upside, then we went into two-sided rotation, then we broke away, and that actually changed. So it was longs, then rotation, then now shorts, and now rotation back and squeeze. So you could kind of see that it has different components to it. So now we're coming out here. This is an outside edge. Let's go back and see what created it. It was created by this urgency. So now when we come back, we are squeezing these guys. So we want to see where in the outside edges here. So we're going to be looking up in here. I don't have that much time left, but we still got some time. Remember, if you have not subscribed to Bookmap, there's a free digital version. If you want to attend ongoing live streams in the Bookmap Discord Trader Lab, where I'll be streaming, doing real-time narration, you'll need to have a Bookmap subscription. There's a free digital version. And then you need to verify with however you register, your username, or you need an email address for that. There's no cost, and you'll get a free version with data. That's pretty cool. And you can play with that. And then when you're following this, you'll have a better idea of what's going on. So we took out the low volume area. So I have nothing to do. So I'm going to be looking now as we come up into volume. I have another low volume area. So I have nothing going on here. So for me, nothing. And these will come off because they're not going to be material to me anymore. And as I start coming through these, they're not material to me anymore. It's going to be the one that stops it, wherever that is. And I don't know. We could come back. Now, don't forget, mid is up here. So there's stops up at the mid. This can come all the way back to the mid and squeeze everybody out. I just have nothing to do. For me, I'm here to take trades, but I'm not here to make them up, and I'm not here to keep busy. I'm here only to interact when I have a structured trade, and I know where they might show up, and they might only give me a rotation because there's no way to know. I do know I got under yesterday's low. I know I'm back in the range. I know there's stops at the mid. I know if I'm a scalper, which I'm not, I could be trading these kind of rotations. It's not worth the wear and tear or the stops. I don't do it. My trades are the bigger swings because that's where you can make a nice day. And not every day's a nice day. Everybody takes losses. Everybody hits loss limits. Everybody makes errors. That's being human. And also trade plans need to be in alignment. And there's times the market is swinging one way and you're going the other, and there's nothing you can do about it. All you can do then is only trade when you have an edge, and think like a casino. Casinos work in a random environment. They don't control anything other than how they play the game, and they do really well. If you're making it up as you go and impulsing in, you're gambling, and that's okay, and you'll win. Gamblers get paid in the casinos, but you know how the casinos work. They extract the dollars over a large sample size from the gamblers. This is the same business. If you're interested in understanding this business, you should visit TraderLab. There's a link in the bottom of YouTube. Remember, there's no cost for the TraderLab community. How we doing, guys, in YouTube? World, how would I, the next target price? Well, there's two ways. I have targets below. But the randomness and the nature of the market doesn't mean I ever have to get there. So what I do is, if I come to a location where I have an edge, and right now the next area is going to be here, but most likely we're going to come back to the mid. I don't know. I really don't have a trade here. I can scalp it, but what I find is I don't do that anymore. I used to trade, well, I used to be a high volume trader, but I don't do it anymore because you only have so much gas in the tank mentally, because your cognition will kind of you'll start getting fatigued, and it's easy to make an error. I found that for me, and I'm only talking about myself, is I catch 20, 30-point trades or 10-point trades. I don't need a ton of those, because my risk is pretty constant over all the trades I take. So if I'm like this little thing we were talking about here, I think it was this right here. Well, if I can enter here with a stop here, I can handle that. Most of the time, I'm around 3 points, 2.5 to 3 point stops is in the ES is what I do. And I don't trade one lots. I got to trade a minimum 2 in Trader Lab, at least minimum 2 lots. And I trade more than that. So the thing is, if I'm going to put risk on, I don't get paid for it. Then what am I doing it for? That's my point. Anyway, so for me, I will take stops. So the way I make up for my overhead is to catch these bigger moves. So right now I don't have a target. Right now the stops are sitting here and here. So I have nothing to do. Now I also know when I get to mid, there's going to be stops. And I also know that we're going to get retail traders selling the mid. And depending what's over here on the left, which is out here, this is a swing. So this is a swing. There's a good chance we're going to take these guys out and come up into here. So it's not a trade recommendation. I'd be looking to sell in here, at least for a rotation, so I can get risk neutral. After that, it's kind of like flip the coin because it's going to be random anyway. All of it's random. But that's my next area to look at. VWAP mid up in here. And remember why. Where's my stops? It's over the last swing, which is here. I think that's where we took our short. I don't even remember. Maybe not. Don't remember. But we have a low volume zone out here, and there's going to be stops here. Stops are at outside edges. And this never has to get back here, don't forget. It could just do wherever it goes, it goes. So what I'd like to do is I have structured trades, at least what I share in Trader Lab. I also do other stuff, but that's not Trader Lab. And I wait. It's like waiting for a bus. And what happens in this is you can very easily get little shallow counter rotations and be selling all of those on the way up and take stops and then get a little because there's a rotation in this. Now, one of these will be tradable. Which one? The one to trade, in my opinion, is the one that has a statistical edge, and that might be up in here. And yeah, we could rotate down 5, 6 points, whatever, but this is where probably the better opportunity is. And even then, everybody takes stops. If I put a trade on out here, I take a stop, I go, oh, that one didn't work. You got to be kind of detached. We're all fearful. So how do you get your hands or arms, if I should say, around your fear? It's to only trade where you have a statistical edge, where you know the probability favors you, not making it up as you go because you see this and you go, I could sell this. Yeah, sure. Where's it going to go? I don't know. The buyers are in control over here. Sellers tried here. They got absorbed. The buyers got absorbed over here. Sellers were absorbed here. I'm not trading between here. Hope that makes sense. Please give a thumb up. In YouTube, by the way, in the bottom of YouTube, there's a link. If you're interested, you can download 60 PDFs of these structured trades that I've been discussing here in the stream. You're all welcome to it. You can use, and there's explanations. I'm not a vendor. There's no cost for this. You will need to be a Bookmap subscriber going forward if you want to attend the streams and Bookmap education. You can do that. There's a free version of Bookmap, digital version. You can all download and play with it, I think that's pretty cool that this is available. Nobody even thinks about it, but you can do that, and you can sample the product that comes with data and everything you need. Please give a thumb up in YouTube. Remember, this stream's available exclusively to Bookmap Discord Trader Lab participants to review over this long weekend. Hope you got something out of this. This is not something that you learn in 5 minutes or 2 weeks. This is about building a business or career building, and it's a business in trading. It is a different process than most of you probably think it is. This is not about an indicator toolbox and mix the right time frames and the right indicators, throw spaghetti against the wall, and you have an ATM in the basement. I'm going to suggest it's different. And if you're tweaking, tuning, using indicators and not getting the success you're looking with, and you just have intermittent winning trades, but you're not going in the right direction, it might have nothing to do with your energy, your intent, and your hard work. It might have to do with the process that's not aligned with the reality of what the trading business might be. Thumb up, please. Thanks for visiting Trader Lab, and I look forward to seeing you guys on Tuesday. Remember, there's no stream. U.S. markets are closed Monday for the holidays. Thanks.